Welcome everyone! So today we're going to review Index Coop. But just before starting on diving into the application and seeing how it works, let's go to some basic concepts to understand it better. So here we are. To understand Index Coop at the best, you need to have some clear knowledge around the crypto investments, that is ETFs, leverage trading, and liquidity mining. If you already know how this works, you can just jump ahead in the video, and if you check down that there's the chapters, you can just jump to the chapters that I'm exploring the Index Coop. But if you don't know what those terms mean, stay here with me. I'm going to be brief to explain how it all works. So let's start with ETFs. So what are ETFs? Putting it super simple, ETFs are kind of a basket. Imagine a basket that you can put different things inside of this basket. So an ETF, it works like instead, let's say you want to invest in crypto, but you don't know what crypto to invest. Or even yesterday, I was reading an article that was saying that just in 2022, there's already over 3,500 crypto tokens that joined the market. They're like, how do I follow up on all of that? And well, that's why ETFs, they were created. So basically, they are responsible, let's say, managers or a committee or someone that's overlooking all those projects. And based on a prefixed criteria, they're going to select the best tokens for this ETF. So instead of you as an individual having to go doing research, picking the best projects to invest, instead you can just go and buy the basket. So inside this basket, that someone else with crypto knowledge is going to be deciding which project to be in, you have the full exposition in crypto. Or if you want another kind of visualization, imagine here like you want to get your groceries, but you don't want to go to the market and pick everything like what should I cook this weekend or whatever. You can just subscribe to a delivery that they're gonna every week give you a basket full of veggies. So like that, you just take it and you use it and you can eat healthy. But now picture this on the investment market. Instead of going there and have to pick whatever coins you have to select, you just invest on a basket of coins and there's someone else that's going to be managing and decide which ones are the best to be part of this fund. Okay, so I hope it could clear what's an ETF. So it's just basically a fund of crypto. And moving forward to leverage. So how does leverage working? So let's picture here the scenario. If you invest something, $100 on something, and you get 10% return, that means $10 of return. If you invest $1,000 on something with a 10% return, that's $100 return. Meaning, the more money you have invested, the same percentage of gains are going to give you more profits, correct? So the idea of leverage is that you can borrow some money from someone else or from an institution and use this borrowed money to enhance your potential profits. And of course, when you use leverage to trade, you have two scenarios. You can earn more, but also you can lose more. So you have to use leverage in you have to have a proper risk management to use leverage, because it opens up huge possibilities for you to win, but also to lose. And that's, let's say, basics of leverage, a way to maximize or to enhance your exposition to a certain investment. Liquidity mining. So liquidity mining is another concept in crypto that very basic. Like, let's say that you are someone that you have two tokens and you are the liquidity provider. So let's say you have a bunch of Bitcoin and you have a bunch of Ethereum. And we already know that there's the market or the decentralized markets like Uniswap, SushiSwap, and all of those. And over there, you can go and swap your tokens. Like if I go there now to Uniswap, I can go there and say, I want to buy Matic in exchange for Ethereum. I just go there and I make the exchange. But like for me to be able to do the exchange, these tokens have to be on the market already. And how do these tokens happens over there? So like, it's because they're liquidity providers. That's basically people or investors who have both tokens, they put a disposition in the market that anyone, like the trader or the investor, can jump to the market and make the trade at any moment. So, and then you may think, but what's in for the liquid? Why would I put my tokens for someone else to be able to do trades? Because also when you're doing all those trades, if you check the details on MetaMask or whatever wallet you're using, you're going to see that there's some fees involved. And a part of, or the entirety of those fees from each trade, it goes to the liquidity provider. So basically, while people are doing trades, your money stays there in the market and you earn all the fees from the trades. And of course, the higher your position in the market, like the more tokens you have as a liquid provider, more fees you're gonna earn. And of course, this is a very simplified explanation, and there are lots of risks on being a liquidity provider. So if you find this interesting and want to know more about it, I'm gonna leave some links on the comment box below as well for all the concepts if you want to deep dive, to know it better, to understand it. Because also when you're a liquid provider, like there's the risk of impairment loss, there are details, just have a look on those links. Because this explanation that I'm doing is just to explain the basics, so we can jump next to Index Coop and you already have an idea on how it works. All right, now that's basically it. Those are the three main concepts that you need to have an initial idea. But now we can move to Index Coop. All right, back to Index Coop. So what they're trying, it's amazing what they are trying to, or what they're creating here. And if you have the knowledge of the concepts that I shared before, it's super simple to understand what they're offering. If it's not, it can get a bit complex. So make sure you understand what are ETFs, liquidity mining, and leverage trading, because this will help you a lot to understand all the potential in Index Coop. So we got here to the website, use your strategy tokens to safely and simply invest in crypto. So if you see, they have a bunch of interesting names here: interest compounding index, DeFi, pulse index, Ethereum 2x-FLI, like what is all of that? So let's get step by step so you can clearly understand it. So landing on the page here, we have two call to actions, the main ones. That's the application, that's open their app, and there's explore products. So let's start exploring the products here. If you jump to explore products, it's going to appear like DeFi Pulse Index DPI. And this goes to the ETF explanation that I was talking about. So what is this DPI? Basically, the DPI, it's a way that you can invest in a variety of tokens without owning all those tokens. So if you jump here, you can see the current price of this index, the market cap, volume, like all the information is here, and the underlying tokens behind this index. So let's say if you invest on the DPI index, you are investing on all those tokens. So they have Uniswap, ETH, Maker, Loopring, Synthetics, and on. So instead of, let's say, if you had 90 bucks, if you'd have to buy all those tokens, like you'd put less than $9 on each token, like it's not even worth it. It's too much trouble, you know, just in gas fees, you wouldn't be able to get this exposition. So instead, if you want to get an exposition on all those DeFi projects, you can simply get the index. So like this, as these projects thrive or not, you're going to float accordingly, and you are not, let's say, just betting in one single token and the entire DeFi ecosystem. So it's a way to follow how the entire industry of DeFi develops, and not only specific projects. And what I find it super nice about Index Coop is that they are super transparent and clear. If you jump to any of their products, you can see what's the object of the product, what's the criteria, because there's someone or there's a community of people that are analyzing, there's checking, make sure this index is following the previous agreement. So like if you find it interesting, okay, this DPI is about investing on DeFi projects, but okay, what's the objective? You can have a clear statement here. You can see the official methodology, like what's the criteria to add tokens to to this index. So it's not simply someone's going, I'm going to pick this because I want it. No, they have a criteria that this criteria has to match in order for these tokens to be part of this index. The index calculations, so to see the value it works, you can understand all the math behind it, and the maintenance as well, how they work it and which period of the month, how everything is structured. Okay, and now let's get back here to index. You see, I want to see the list of all the products they have. So if you open the products here, you're going to see the list of all the products they offer. And those ones here, like with the JPEG, the PI and VI data, BED, and GMI, they works in kind of the explanation of the ETF. No, it's a basket of investment, each one with their own objective and investment on different sectors. So we just saw the DPI, and then there's another one here, the GMI, that it's also a DeFi project, but the DPI, it focuses on investing in the blue chips of DeFi, like the top projects. The GMI, it has a different approach, focus on projects that are on the early stage, but they are not considered a blue chip yet. Let's say it's not one of the top projects yet, meaning that there's a high growth potential, let's say. And then if you see here, there's all those tokens behind it. And we can also see the methodology to pick those tokens to be part of this index. So it's projects that are from the market cap more than 30 million and less than 5 billion. And if you want also to understand it, but how do they pick those tokens? You know, here there's all the criteria. And basically like GMI initial constitution selection with the assets on CoinGecko's DeFi filter. So if you CoinGecko, so you get here CoinGecko. If you see, it appears all the tokens, and you have all categories. So you go to DeFi, that's the one. And here, that's how they are filtering, or that's how was the initial constitution. They filtered from this list all the DeFi tokens and the ones with the market cap behind those two numbers here, and all those other criteria that would classify these projects as a high potential with high growth. So each one of those indexes, they have, let's say, a meaning on a strategy, like Web3 Data Economy Index. So like this project focus on database Web3 projects. So you can see here a brief introduction, and then all the tokens behind this index. And then you can see here what's the objective of the data. The same all the others, like an easy exposure to the growth of all those data projects on Web3. And then you can jump down here. Okay, and what's the criteria, how they were selected? So like that's the reason, or that's how those projects were selected, and so on. And there's different kind of projects. There are projects that focus on NFTs, on DeFi, or this one, for example, the BED. It's investment strategy. It focuses on Bitcoin, Ethereum, and the DPI. So like the token on this index, it follows Bitcoin, Ethereum, and also it follows the growth of DPI. That's another index. So like you can also have, let's say, these products that follows other projects in their basket. And again, here you can see the methodology. So like 33% of this index is invested in Bitcoin, Ethereum, and the other 3% on the blue chips of DeFi. So like this, you are invested on a big range of products. Now, okay, let's stop talking about these funds, and let's move to the other side of things here. That's those, let's say, these higher names like 2x, I, and all that. So let's take an example here, Ethereum 2x. And this will come in place the explanation of leverage. So Ethereum 2x Flexible Leverage Index, what does it mean? So here, it's an easy way to have a leverage exposition without having to go through complicated maneuvers. So if you buy this index here, you're basically going like 2x leverage on Ethereum. So if the price move 1%, it's going to be 2%. If move 10% up, it's going to be 20%. And down the same way. So this is a way if you want to be exposed to Ethereum without having to So it is a way to double your exposition to Ethereum without having to think about complicated way, borrowing money, looking for leverage trading positions. No, you can simply buy this index, and the index itself is going to give a return based on the growth of Ethereum. And all the other products on this way, they work similarly. Like there's Bitcoin and there's Polygon. And the same way you can be leveraged positively, you can also be leveraged on the way down. So if you jump here to, it's this one, Ethereum, that's the inverse Ethereum. So this one, it's going against the market. So like this fund here, if the price of Ethereum goes down, the price of this index goes up. So this is the way that you can short against the market. So like if you see that Ethereum or Bitcoin on other products is going down, you can buy this index, and as the more the price goes down, the more this product is going to profit. So this is also a way to protect yourself in the bear markets, or when you hear lots of people online saying like how to profit during bear markets. Well, learning how to short, it's a great way that even if the price goes down, you're making some profits. Okay. Enough of that. That jumps to the application. So if I click here on the app, it's going to open here the app. It's a pretty simple application. Once you understand all the concepts, it's straightforward. So it opens here the app. Yeah, don't like, yes, give me the night. So it opens your dashboard. It tries to connect on my wallet here. If you see, you can use it in Ethereum or Polygon. So whatever you have on your wallet, here Ethereum DAI, USDC, or stake Ethereum, then you can go and swap it for one of the products over here. And what's also super interesting, if you checked one of the videos below, I have some staked Ethereum that I staked on Lido that's giving me some interest. You can also use this staked position, and that's the beauty of liquidity mining. And you can swap, for example, my staked Ethereum for iETH. That's iETH. It's kind of a way to get a leverage exposition on Ethereum. So like if you took some Ethereum, you staked on Lido, and to go leverage, you still wanting to be more exposed to Ethereum, you can swap your liquidity position for the iETH. That is going to give you even more returns if Ethereum keeps raising in price. Simple as that. You're going to select the coins that you have. You click over here, you select the product that you've taken. You approve the tokens, you swap it, and that's it. It's the same way you're swapping a token, but instead of owning the tokens, you are trading for the index that's going to follow all the tokens that we reviewed before. Jump here to the products, and I like a lot this wing. Here you can see all the return of their indexes, and it's going to make lots of sense. If you see everything's on red, we are the bear market, everything crashed since the beginning of the year. So if you see everything's on red, but there are those in green, and what does it mean? If you see, that's the inverse positions. So if you see here, that's if you short Ethereum in the last 3 months, it's 26% up. Here is the short of Bitcoin. This one is the short of Matic. And if you see here, this is also a way that investors, they protect themselves. Because even, I don't know, if you own some Bitcoin, if you own some ETH, and you don't want to get rid of, you don't want to sell them for whatever reason, you can have a short position or in a short index, because even if whatever you have on your portfolio is losing price, but if you have a short position that's increasing price, and kind of balance out. So that's also a way to protect yourself. You start learning all this difference about longing and short. This can be a nice strategy, or it's a nice skill set for you to have to protect the health of your investment. So keep this in mind. And here we can have this overview of all the performance of this index in day, weeks, month, or the 3 months return. One more here, we have the index. They have their own tokens, and these tokens is more if you are into their governance, if you want to participate into the project, you can also get their index tokens. And if you are you really like the project we're proposing, what I would suggest you to do is to go to their documents, like docs.indexgroup.com, and you have the full material here, like understanding how it works, every part of their indexes, their principles, and all of that if you want to contribute to this project. Moving to the liquidity mining, and that's the last concept for us to have a look. As I mentioned before, like in order for you to buy some stuff, someone has to be providing the two products. So for example, here in my dashboard, I buy some DPI with my staked Ethereum, like I'm swapping whatever I have staked Ethereum for DPI. Like somewhere in the market has to be someone that has the staked Ethereum and the DPI that allows me to do this exchange, that's taking my staked Ethereum against the DPI. And that's what's liquidity mining. So if you already own some of the products and you want to expose yourself to get some rewards for supplying liquidity for the index Coop products, you can just be a liquidity provider of the project and earn more rewards on top of it. So it's also a way, and that's what's nice about all this DeFi ecosystem as well. There's also a way that you can go maximizing the way you earn your rewards, that even in down markets, you are still collecting staking fees, rewards for being a liquidity provider. So that's super nice as well. That's Index Coop. If you check the interface of the application is super simple. You come here, you swap tokens, you can have a look on the products, you can be a liquidity provider, and there's the index token. The most complex out of here is understand all the concepts behind of the product. So if you liked it, if you want to jump on board to get one of those index before doing anything else, go do some deeper study, understand what's it behind it, how it works, who controls it, how it is exposed, because it can be a nice way that you just need to do a study once you find an index that you like it a lot, you can just invest in this index and you're good to go, you know. And just to finalize, guys, well, that was an overview of Index Coop. Let me know in the comment sections if you like it, if you don't, if you'd invest in an index fund, or if you prefer to go and buy a token yourself. And of course, this is not at all financial advice. I'm just here exploring different applications around Web3 and sharing my vision, my opinion on how all that works. But then if you'd like to go jump in the application, invest some tokens, doing whatever, it's completely up to you. I'm just trying to help other dApps around there to bring awareness that they exist, because as there's so many projects appearing every day, or even projects that's been here a while, but so many things out there. So it's nice to bring awareness, to show, oh, these projects exist. That's what they're trying to do. So if you liked it, jump to the docs, have a look, understand it better, and let me know. And of course, see you next time. Bye-bye. Thank you so much for watching this video. Please do not forget to subscribe to the channel and give it some likes, so I can keep producing at this nice pace and bringing more news about Web3 to you. See you next time.